You've saved up some money and want to make it grow. Should you trade Forex, crypto? Both are popular, but they are very different. Picking the right one depends on your goals and risk tolerance. Today, we'll break down Forex and crypto side by side, cut through the hype, and help you figure out which is right for you. Let's dive in, starting with the heavyweight Forex. Forex. It's a term you'll hear often in the world of finance, or more formally, foreign exchange. It represents the global marketplace where currencies are traded. It is, without a doubt, the world's largest financial market, with trillions of dollars traded daily, dwarfing even the stock market in sheer volume. This constant flow of capital creates opportunities and challenges for traders around the globe. In the Forex market, you don't buy or sell goods or stocks. Instead, you trade currency pairs. These pairs are represented like EUR/USD, and when you trade, you're essentially betting on one currency rising in value against another. It's a relative valuation game. It's a market primarily dominated by large financial institutions, like banks, who facilitate these massive transactions. And even governments participate, influencing currency values through monetary policy and economic decisions. This high level of participation makes it a highly liquid market, meaning you can usually enter and exit trades easily, and it's also relatively stable compared to other markets. Because of its stability, price swings are usually small and incremental. These movements are often driven by economic news releases, such as inflation reports and employment figures. Major political announcements and other global events can also have a significant impact on currency valuations. One of the key advantages of Forex is that the market runs 24 hours a day, specifically 5 days a week, closing only on weekends. This allows you to trade almost any time, fitting it into your schedule, no matter where you are in the world. To potentially increase profits, most traders use leverage. Leverage can significantly amplify gains on successful trades. But it's crucial to remember that it can also amplify losses just as quickly. Therefore, sound risk management strategies are absolutely key to protecting your capital. In short, Forex is about making steady moves, capitalizing on small but consistent price changes. It requires patience and a deep understanding of global economics and how different factors influence currency values. Crypto is the opposite: fast, volatile, open 24/7. You're trading digital coins like Bitcoin, Ethereum, not backed by any government. Prices can double in hours or crash in hours, driven by hype, news, social media. The market never sleeps. Big moves can happen anytime, even while you're asleep. High risk, high reward. Make a fortune overnight. Lose a fortune overnight. It's a playground for risk takers, tech enthusiasts. Crypto is all about speed, speculation, embracing uncertainty. Alright, let's dive right in and compare the essentials. We're going to break down the key distinctions between Forex and crypto trading, highlighting what you absolutely need to know before you even consider putting your money on the line. Forex is generally more stable. Currency values tend to fluctuate less dramatically compared to the roller coaster ride that is the crypto market. Forex is also heavily regulated, offering a layer of protection for traders. There are established regulatory bodies overseeing Forex brokers and market activities. Forex moves primarily on economic data releases, geopolitical events, and central bank decisions. Understanding these factors is crucial for successful Forex trading. Crypto, on the other hand, is wild. Expect extreme price swings and volatility that can make your head spin. Crypto is mostly unregulated, which means less protection and more potential for scams and market manipulation. Crypto moves heavily on market sentiment, social media hype, and news cycles. A single tweet can send prices soaring or crashing. Forex offers built-in breaks. The market closes on weekends, giving you time to relax and recharge. There's no trading on weekends. Crypto is non-stop, operating 24/7, 365 days a year. The market never sleeps, and neither can your vigilance. Forex's high liquidity means easy trades at relatively stable prices. You can usually enter and exit positions quickly without significant slippage. Crypto's liquidity varies wildly, especially with smaller coins. Trading illiquid coins can lead to large spreads and difficulty executing trades. Regulation in Forex adds a layer of safety and consumer protection. Crypto's lack of oversight means more risk and potential for fraud. Forex rewards patience, thorough analysis, and a deep understanding of global economic trends. Crypto rewards quick reactions, a high tolerance for risk, and the ability to spot trends early. In Forex, you're essentially analyzing the relative strengths and weaknesses of different economies. In crypto, you're often betting on the hype and momentum behind specific projects and technologies. In crypto, you're often betting on the potential of new technologies and the adoption of blockchain solutions. Both Forex and crypto are easily accessible online through various brokers and exchanges. However, the learning curve is very different. Forex requires understanding economic indicators, while crypto demands knowledge of blockchain and tokenomics. The risk profile is also very different, with Forex generally considered less risky than the highly volatile crypto market. Ultimately, your choice depends heavily on your personal appetite for risk and your level of interest in global economics and financial markets, as well as your fascination with digital innovation and emerging technologies. So carefully consider these key differences before you jump in and start trading. Make an informed decision that aligns with your goals and risk tolerance. So, you've explored the basics of both Forex and crypto trading. Now comes the big question. Which should you choose? Which market aligns best with your individual preferences and aspirations? If you prefer stability, a measured approach, and a reliance on established data and a slower pace, where decisions are carefully considered, Forex is likely your game. It offers a more traditional and regulated environment. However, if you crave excitement, thrive on rapid change, and are drawn to cutting-edge innovation and can stomach big swings, the inherent volatility, crypto might be for you. It's a faster-paced, riskier, but potentially more rewarding landscape. Ultimately, there's no universal answer, no one-size-fits-all solution. It's just about what truly fits your personality, your financial goals, and your risk appetite. Be honest about your risk tolerance. Understand how much you're willing to potentially lose, and most importantly, what excites you and keeps you engaged. Success in either market starts with a solid foundation of knowledge and self-awareness. Know your strengths, weaknesses, and biases, and unwavering discipline. Ultimately, choose the path that lets you sleep soundly at night, and stick to your trading plan, adapting as needed, but always staying true to your core strategy.